Andrew Holland, the CEO of Ambit Invstment Advisors, joins us on the phone line from Mumbai to give us his view on multiple triggers that have panned out in the last couple of days. Andrew, hi, good afternoon. It's been tricky times for our markets. We've had to deal with many things. On one hand, the yuan devaluation. On the other hand, the monsoon session washout. Do you think the markets are headed southwards from here?
Yeah, I still think they are, actually. I mean, the commodity market's telling you all you need to know in terms of that. Well, the problem that we're seeing from China, I think will keep creeping out. We saw it with Alibaba's results. I think it's just going to get worse. So, if you look at if I think it's, commodity prices are going to fall down more. You can see what's happening with the steel companies today on the metal counters. That's going to put pressure on them and their balance sheets. That's going to translate back to the banking sector here. No one's hedged properly because they've all thought the rupee was, going to be stable. And if I put an interest rate hike on top of that, then dollar-denominated debt becomes more expensive as well. So, we're just at the beginning of some of this downturn, and I think the banking sector in particular is going to take it on the chin, and that's going to hurt the real estate sector as well.
Andrew, hi, good afternoon. So, you've seen, or rather today we have seen some hopes of a rate cut. At least that's what the Bank Nifty, was suggesting. And there was some talk as well that maybe there's a bit of a pressure on RBI as well to cut rates ahead of the policy. Do you think that could be a bit of a trigger for the market, or is that well discounted right now?
Okay, so, if I think about what he said last time, the RBI governor, then he said there's two things that stuck out in my mind. One was that, he's worried about what the Fed will do. Therefore, he wants to see what the action will be taken in the middle of September. So why would you do it before that if you've already said it's a risk to you? And second point is that he's also talked about, the hedge positions, or actually the lack of hedge positions with corporates in India. So the currency is down to 2.5% in the last few days, so around that. So, cutting interest rates will only exacerbate that problem. But, to be honest, I just can't see he would do that ahead of the Fed meeting.
Okay, so no rate cut expectations ahead of the Fed meeting. Perhaps it's a good thing to keep the expectations low in a market like this. But, you mentioned the global worries and the fact that repeatedly they will keep coming back. So what do? Do you use every dip as a buying opportunity in the market? Do you raise your cash levels? Do you look for stock-specific ideas? How do you approach the markets now?
Well, the only stock-specific ideas I can think of now is really, shorting the banking sector. Yes. I think it's taking into account the problems that's going to happen with, corporate India again, particularly in the metal sector. And that will affect, obviously, companies with high debt. So, we're not going away from the fact that the banking sector is going to reel up the next set of problems. The steel prices have fallen very sharply, and you just can't get away from that. So, what would I do? I do what I do in our long-short fund. We're sitting on 75% cash, because the market's going to go all the way back to 8,200 first stop. And then you have to see what's caused getting there.
Okay. So, Andrew, what's the downside risk to this market? Do you think, this year has been flat for us. Do you think this year could be negative year, and by some margin? Is there a risk of slipping below 8,000 again? Because previously you maintained a range of 8,000 to 8,500 and then a big rally towards the second half of the year. What could change this hypothesis?
What could change it completely would be that, this currency war, which is globally happening, will have a bigger effect than we're all expecting on global economies, particularly, rather this is Germany, not China, going forward. And another kind of, growth scare for Europe is really not what people are expecting. And then, of course, you're going to start questioning central banks' ability to get us out of this, because they've done everything that we know, or it's all been unprecedented measures. What more unprecedented measures can we have? So that would be then a lack of confidence. So that's the kind of a worst-case scenario. That would change my mind.
Okay, that's some news coming in. The Hero Cycles chairman, O.P. Munjal, has dies at this point, so he's no more. Remember, he was pretty old. He died at the age of 86, and he has been not just a very successful businessman, but a huge philanthropist as well, O.P. Munjal. So that's some very disappointing news coming in over there. May his soul rest in peace. The Hero Cycles chairman, O.P. Munjal, dies. That's the information that we're getting at this point in time. Andrew, you said that, you will short the banking sector, because of the volatility that we've seen. But what about some of the defensives? Because we've seen that emerge as a hiding place, the IT stocks, the pharma stocks. Are these spaces that you would want to be in now?
Well, fortunately, we are. We are hiding in them. And that's because we expect the rupee to get to 66 now, very quickly. So that's the only place to hide. Do I actually like the IT sector in longer term? The answer is no. But is it a place to hide? Yes. Because, I'm not saying we're going to a rerun of the currency crisis of 2013. We're in a better place than that. But it wouldn't surprise me if other currencies or other countries go through a similar crisis. I mean, the ruble and the Brazilian real are telling you different stories. I don't know how their economies are keeping going. So there's a lot of problems out there. Again, I think what worries me is that coming into this, we've all been a bit too complacent about China. It is the second largest economy in the world, and it will have an impact on global growth.
Yes, it will. So, Andrew, that's for IT. What about pharma? That's also done well over the last couple of days.
Yeah, I think obviously, if you're expecting the rupee to depreciate, then obviously there'd be a beneficiary. Again, my fears of the sector on the general basis is that, you can wake up one day and find out the regulations in the US have changed for you. So, you've got to be very stock selective in terms of your pharma picks.
Okay, but one trade that's played out really well this year, Andrew, has been the, oil marketing companies, tires, paints, basically anything that has crude or derivatives as raw materials. Is that still a good trade?
They're all trading on pretty high PE. So, again, I'm sure it's a place people will think of hiding. I'm sure that, prices of these, not commodity-based, but, I'm sure at some point these companies will have to start passing on some of the raw material cost benefits that they're getting because someone's going to bring the price down at some point.
Okay. Just to flip that question over a little bit, you were talking about how this China yuan devaluation is not a small issue and it may sort of balloon into a bigger deal. With the cheaper Chinese yuan affecting India's competitiveness, which are the sectors that you think could get hit quite hard? We've seen it happen to tires already. Which are the other pockets that you would be worried about?
I don't really see India is a big exporter, so I only have to look at, the commodity companies, or commodity-based companies, and they're the ones where I just a lot of pressure. And of course, that's quite a large proportion of your Sensex or, Nifty earnings. So, it also increases the rating. So, what happens is that, the PE remains high for India because of your pharma, consumer, and IT. But your earnings, fall because, the rest of the sectors like, commodity-based metals and banking, have no.
Okay. So, Andrew, a word on what's been happening in Parliament. Do you think the investors are beginning to get a bit nervous, and this whole Modi premium that our market got, is that at the risk of vanishing if it's already not vanished?
Yeah, I think some time ago, foreign investors' euphoria towards, the reform process has evaporated. I think that was probably around March, April of this year. So I think expectations are, there's no expectations now. I think people just will wait and see if it comes through. And I think you then have to work through what you were expecting and what kind of growth in GDP. And then which sectors or stocks you were thinking that could be a beneficiary or not of land acquisition or GST. And, it's going to take a lot longer for that. All
right, Andrew, we'll leave it at that. Thanks for joining us. So that's a cautious view coming into the markets. And by the way, just take a look at the screen. Now he's given up